As many investors wait on the sidelines for a real estate rebound, my next guest company is trying to get out ahead of the crowd, ramping up $700 million worth of projects, including a 270,000 square foot speculative building in Los Angeles, California. Joining us now for a CEO sit-down is ProLogis's Chief Executive, Walt Rakowich. Walt, good to have you with us.
Thanks. Great to be here, Pimm.
All right, so what are you doing in Los Angeles?
Well, we love that Los Angeles is the largest logistics market in North America. We love the market, and very, very deep. And, you know, the goods that are coming in the ports of Long Beach and Los Angeles are up over 15% year over year. We like what we see in the market, and we think it's time to develop there. So we've broken ground on our first building in the last couple years.
I was going to say, this is like the first time you've broken ground on a North American operation in like, 2-3 years.
It's been a couple years. It's been a couple years. It's been a couple tough years for the real estate business in general, but we're beginning to see growth. For the first time, we saw positive gross absorption of space, meaning the overall market itself grew this year. It did not grow last year, and so that gross absorption of space is leading to the need for new development, and we want to be on the forefront of that.
Is that gross absorption of space coming with any price increase, with any price stickiness, or is it really just people saying, all right, I'm willing to go ahead and take the offer, I'm going to take the order right now?
Not yet, and the truth be known, market rents have fallen 15 to 20% or so over the last couple years, but there's no question that the market rents have bottomed out now in general. And I would say that in a few markets, by the way, Los Angeles, they are beginning to creep up a little bit. So that's good news for our business. I think the overall thing that we see is that demand is picking up, and demand is a precursor to rents. Hopefully we see a little bit more absorption, and then we'll begin to see rents rise. All
right, now I know you're not only focused on what's going on in North America, you're a global company. Let's go through the world. Tell me first what's happening in Asia.
Well, what's happening in Asia is phenomenal, no question about it. Our large operation is in Japan.
That's right.
And what's really happening in Japan is you have companies that own facilities, and they tend to be very, very old facilities, and they're focused on coming out of owned facilities and into leased facilities. And those older facilities that could be 40 or 50 years old just don't work from a logistics perspective today. So they want to lease, and they want to lease high quality, efficient distribution. So even though there's not a tremendous amount of growth in Japan, GDP growth today, there is a tremendous amount of obsolescence growth.
So there's a reshuffle in terms of where people are allocating their resources.
A complete reconfiguration of the distribution.
Just to give people an idea, in the distribution network, you're adding things. We're not just talking about doors and trucks. We're talking about technology.
Oh, absolutely. We're talking about a facility that has a lot of clear height that you can actually stack. They're facilities that are very deep from a trucking perspective, and actually they're facilities that are green, because now we're beginning to put solar on our roofs, because we happen to own more roof area than anybody in the world, and so we're turning some of that roof area into solar, and that's really an exciting thing from the perspective of an owner of hard assets.
All right, so the Japanese market, getting a reshuffle there.
Yep.
Chinese market, booming?
Chinese market is booming. We do not have an operation today in China.
But you want to be looking at what's going on there, right?
I think you have to continue to keep your eye on it very, very closely. There's a lot of changing rules that are going there, and we're monitoring it very closely.
Tell me about Europe right now.
Well, Europe, believe it or not, I mean, Europe has gotten a bad rap from a financial perspective recently, but very similar to Japan, also completely reconfiguring the distribution channel. Again, companies moving out of older facilities that they own. Remember, 15 years ago, you had a country-specific model. What happened with the advent of the EU is that all the borders broke down. There are no cross-border tariffs, and people now are shipping goods throughout Europe, very similar to the way they would in the United States. And so companies are going from a country-specific model distribution to a pan-European model, meaning larger facilities, more regional facilities, and so the whole European structure is changing, and that means development, new development for us. So we've been very, very happy with what we see going on in Europe.
All right, well, if that means new development, that must mean funding. How's the funding side?
Well, it's interesting. Our belief today is that we are developing new facilities throughout the world, and we're selling some of our second-generation facilities that are now, 20 to 25 years old, and they're phenomenal buildings, don't get me wrong, but we're trying to recycle capital and upgrade the overall quality and age of our, I should say downgrade the age, making them younger and younger, of the overall
So it's like getting
portfolio.
a brand new fleet of aircraft.
You got it. And so we're really more recycling capital today to basically fund that development.
Where do you want to be that you're not right now, besides China?
Right now we're going to focus very, very hard on the markets that we're in. We think we can become more and more efficient in the markets. We have a terrific operation in North America. We're in Mexico, Canada, the U.S., in 13 countries in Europe and Japan, and I think we've got more than enough to do today in the countries that we're in.
All right, and the last question, what do you see for Christmas and the holiday shopping retail? Are you seeing that flow of goods?
We're beginning to see the flow of goods. One of the things we've seen, though, is that retailers over the last 6 months, sales have increased, but they've been really hesitant to increase the inventories. I think if we see another quarter or two of this, I think we'll begin to see more inventory growth.
Always great to get your thoughts on what's going on in the real economy. Thank you very much. Walt Rakowich coming to us from ProLogis. Thanks very much.